Hi, TrueBuild members. Welcome to the next step in our compliance series. Today, we are talking about company formation. Company formation is extremely important. If you've already formed your company, you know that that is what essentially legally separates the business from you as an individual. If you've already done your company formation, there's still very well maybe some extremely useful information in today's video. And if you are just getting into company formation and have not yet filed, you will need all of the information that we are going over today. So we're going to go over just an overview of what we're touching on in today's video. We'll go over what incorporation is and what it does for your business and you as an individual. Then we'll walk you through what the options are as far as forming your company. Then we'll walk you through some action items to complete this step. And then to top it off, we'll go over a little bonus feature about foreign qualification, but just know that we do have a dedicated video after this step regarding foreign qualification. So if that's something that you end up needing to do, just know that there's an entire video going over that as well. Okay, so just to get into it, the three main structures that fall under company formation would be limited liability companies, also known as LLC, C corporations, and S corporations. And S corporations kind of its own thing. It's actually a tax status, so we'll go over that as well. But these are the three main corporation types that you can have. And so basically what company formation comes down to is picking which structure you're going to use. And while we can't provide legal advice or tax advice, and we always recommend that you consult a CPA or an accountant for matters like that, we will go over the differences between these different structures. And then we do recommend that you consult a CPA or an accountant to find out which structure of these works the best for you, because really the difference comes down mostly to taxation. Okay, to start, limited liability companies. This is the most popular option for small businesses. So if you operate a company by yourself or maybe with a partner, LLCs are kind of designed for that. They have a lot of the same benefits that C corporations do as far as liability, so protecting personal assets and things like that, while also being geared toward smaller companies, so you get more flexible management. You do have the option of pass-through taxation. Owners within LLCs are called members, so that can be confusing if you're not familiar with the terminology. So when you go to file an LLC, they'll ask you how many members, and that really just means how many owners. So either you as an individual, maybe you have a partner, or maybe you have multiple members. Those members can be individuals. They can also be corporations or other entities. That gets a little bit more complicated for the purposes of, forming your company from the start. Most likely it's just going to be yourself or maybe some partners. And then also know that for limited liability companies, you do have the option to elect that S Corp tax status, which we're going to touch on as well. Okay, now C corporations. This is the most common corporate structure, and it's ideal for larger companies or companies that are looking to go public, so having shareholders and things like that. This C corporation status structure is geared mostly for larger companies that are looking to go public, like we said. You have unlimited shareholders, and then there is the possibility of double taxation, which the S Corp tax status kind of alleviates. So if you do file a C corporation, you can also elect that special S Corp tax status, and that prevents double taxation. Okay, so now to the S Corp tax status. This is a special tax status with the IRS. It eliminates that double taxation on profits that we talked about. With that, though, you do have a maximum of having 100 shareholders. So if you want a lot of shareholders, maybe the S Corp election's not for you. The S Corp status can apply to corporations and LLCs. And just know that if you do elect the S Corp tax status, the owner does have to take what's called a reasonable salary, which is not defined by the IRS. So it's a little bit ambiguous, but the owner must take a reasonable salary. And then distributions on top of that don't have that double taxation. We'd recommend, we have a True Guidance article on this as well, going through what the S Corp election is and giving you a lot more information about it. Also requirements involved. So you do have to meet certain qualifications in order to elect S Corp tax status. There are also deadlines, so you don't want to wait too long after you file the company. Say you file as a C corporation, you might not be able to necessarily elect that status whenever. So there sometimes are deadlines. So we recommend going over to that True Guidance article, which is on the side of your login there in your portal. On this page under True Guidance, you'll see the S Corp article in there that you can reference. Okay, you can elect this status later, like I mentioned, however, limits apply as far as deadlines. So just know that. Okay, now on to completing your formation. So the basics really just comes down to, number one, settling on the structure that you're going to pick. So what we just touched on, those are the three main structures. So you do need to basically pick the structure that you want. And like we said before, we always recommend consulting a CPA or an accountant for extra guidance on that. Somebody who knows the ins and outs of your business and kind of how you plan to file. So take all of that into account. You don't always need a CPA or an accountant to decide that. If you're well versed and you're set on your structure, that's perfectly fine. So consider your company's short and long-term goals as well, because it's hard to change structures. So, how you run the business now may be different from how you plan to run it in a few years. So take all that into account. And while a company name and address, like we've touched on in previous videos, is easy to change, relative to structure's harder. So we want you to, select your structure how you want it from the beginning. Number 2, pick an incorporating service or method. So you'll need to either pick an incorporating service to handle your filing or file yourself if you think you are capable of doing so and you have the information that you need. You can file directly with the Secretary of State yourself. Just know it's a little bit more time consuming and involves you kind of knowing exactly what forms to file and things like that. So you can go to your Secretary of State website in order to handle the filing yourself. You'll just kind of be a little bit more autonomous and needing to figure out which forms are necessary for your state. Every state's a little bit different, and every state's Secretary of State website in order to do this is a little different. A lot of them let you file it directly online, which is very convenient, while others may require you to go down to like a county clerk office or something like that. So just take all that into account. And if that all sounds a little bit too complicated for you, we actually have a ton of resources within your portal to basically partner you up with companies that can handle the filing for you. And so a lot of the time that just streamlines the process. A lot of these services also have like a portal where you can log into it and track your filing. So that's extremely handy if that's not something that you want to, take your own time to stay on top of. So I'm actually going to take you over to the portal to show you where you can find those resources. Right here under Action Tools, we have a link to the kind of global Secretary of State website. So I'll actually show you what that looks like. This is basically just links to every state's individual Secretary of State website. So whatever state you're incorporating in, you can pick the link here. It'll redirect you to that state's it actually just redirects you to that Secretary of State's business site, and then you have to find the incorporating forms that you need. So you can do it that way, of course, and that's also a way that you can search if the name for your company, like we've talked about previously, is available. So maybe if you've already used this site for that purpose, this is familiar to you. So you can use that. And then this is actually, we'll go over this in a minute. This is regarding the S-Corp status. And then we have a couple resources here for companies that can handle your filing for you. So if that's not something that you want to spend your own time to deal with, then you don't have to. There are a ton of companies out there that can assist you with it. So we always recommend doing what is most convenient for you, just to make sure it gets filed properly. You don't want to make any mistakes. It's extremely important. Okay. Once you've settled on your incorporating method or service, you are ready to file. And once you have your company name and address, like we've already touched on, those are really just the key pieces of information that you need in order to do your filing. Once you have those and you've picked your incorporating service, you've picked your structure, you are ready to file. So that is really an overview of just all that's required in order to complete this step. Not much. Okay, now some optional steps. So this gets a little bit more into the nitty-gritty. Registered agent service. So along your filing, as you're going through it, you will be asked to designate your registered agent. All that means, registered agent is just really a service, sometimes an individual that's able to receive mail on behalf of your company during normal business hours, 9 to 5, Monday through Friday. This can be you, so you don't have to use a service to be your registered agent. A lot of the time, registered agent services do cost money. They typically charge an annual fee, and basically they'll just put themselves, it'll typically be either an individual's name or a company, and they'll put themselves as your registered agent with their address on your filing. Just know that you can be your own registered agent. So essentially you would just put your own name and your address, and that is perfectly fine. So that is up to you. Just depends on the benefits for you. If there are benefits to having a registered agent service, you can certainly do that, but know that you don't necessarily have to pay those extra fees and you can be your own. Number 2, foreign qualification. Like I mentioned, we have a dedicated video on this, but just to touch on it, if your company operates across state lines, so say you operate in multiple states, you'll need to incorporate your business out of an original state and then file a foreign qualification in the states that your company also operates out of. So we'll go over that in more detail as well. S-Corp election. We touched on this briefly. Both C-Corps and LLCs have the option of electing S-Corp tax status. If this is beneficial to you for your company, really it comes down to taxation. Make sure to consult an accountant or CPA. It's a little bit more complicated of a concept. And so you definitely will want somebody's expert guidance on this. So somebody who's familiar with your business and what the long-term goals are, how you plan to file, things like that can help you make this decision if you're going to elect S Corp tax status. There's typically a point at which this becomes beneficial. And it's really if your revenue's over a certain point. They typically say if your gross revenue is over $40,000, then a year for your company, then this could potentially be beneficial. But if it's under that, it's probably not worth it. So just keep that in mind. And then a couple warnings that we have for you. So there is something called a shelf corporation. Maybe you've heard of these before, maybe not. It's best if you haven't, because then you don't necessarily even need to worry about this. But out there are certain companies that basically make a business out of starting other companies and then selling them. So they'll start a company, let it age, sit on a shelf, if you will. That's where the name comes from. Let it age and get that time. And then they'll basically sell it to an individual with that time attached to it, because there are some benefits to having, a certain number of years incorporated. And so that's what this premise really is. These pose a very high level of risk when it comes to establishing corporate credit for your business and getting funding. Dun & Bradstreet is pretty privy to shelf corporations, and if they find out that your company is a shelf corporation, they can potentially flag your file, and that would be a horrible thing, because you cannot really get your Dun & Bradstreet profile unflagged, and then basically they will stop you essentially from building business credit, at least on Dun & Bradstreet. And then also creditors and lenders sometimes are privy to these things as well. So if they pick up that your company is a shelf corporation, especially if they see it just directly with Dun & Bradstreet, if they pull up your Dun & Bradstreet file when they're in underwriting and they see that, you will be denied 9 times out of 10 for funding and credit. So if at all possible, really just avoid shelf corporations. The risks outweigh the benefits in our experience, and it's never worth it for your company's file to get flagged, because if you invest the money into a shelf corporation and then you end up flagged a couple months into building your company's credit, it's not worth it because it's not able to be undone. So do not use a shelf corporation. Just start from scratch. Your company will age, and yes, it'll be a new corporation that won't have that time, but that's okay. We'll get into the kind of nitty gritty of doing applications later on once you're in that phase, but some of the applications don't necessarily go off of your actual incorporation date. Sometimes they'll just ask for your time in business. And in those cases, sometimes you can use your company formation date, like when you started operating the company, even as a sole proprietor before you were officially incorporated. So just know that. And then number 2, Delaware, Wyoming, and Nevada corps. So incorporating in Delaware, Wyoming, or Nevada without actually operating the business in one of those states does carry some risk if you don't foreign qualify. Disclaimer, in regard to liability as well as taxation. So if you operate the business in an entirely different state, but you're incorporated in Delaware, Wyoming, or Nevada for maybe you saw privacy benefits or tax benefits, things like that, those are typically the reasons why individuals do this, and you don't foreign qualify the business, you do carry risk. So basically what can happen, you can be liable for all of the back taxes. If it's found out by some agency that your company actually operates out of a different state, they will hold you liable for all of the taxes that you would have paid in that state had you foreign qualified. So that can be a problem. And also you can lose the liability protection as well through that state. So the whole point of incorporating is setting your business aside from you as a person so you can protect your personal assets, and then your business's assets are also protected. You can lose that protection if you don't properly foreign qualify. If you don't operate in one of these states and you're incorporated in them, you can lose that liability in certain scenarios. So we don't want that. The solution is to either reincorporate in the proper state so you can dissolve the Delaware, Wyoming, or Nevada Corp if you don't feel like going through the foreign qualification process, and then just reincorporate in the proper state. Or you can do a foreign qualification. So say, for example, you incorporated in one of these states a long time ago and you don't want to lose that time, you can foreign qualify instead. And like I said, we have a dedicated video on that, so we'll walk you through that. Okay, so some closing thoughts. Select your structure. This does have tax ramifications, so make sure to consult with a CPA if you are not sure, who has your full business picture in mind. And then also number 2, filings must be maintained. This is important. So once you do your filing, you'll have an incorporation date, and then typically each state requires you to file an annual report. And so as the name suggests, you file that once a year, and it's typically a year after your incorporation date. So you will need to stay on top of that. There are small fees sometimes associated with the annual reports, but they're pretty small. And basically, it's just to keep your company information updated as well with the Secretary of State. You should always be updating your information with the Secretary of State as it changes. So say, for example, your business address changes 3 months into your incorporation and it's different from how you originally filed it. You should update that as soon as possible, and we've kind of touched on that. But the annual reports also serve for that as well. They are a required filing. If you don't file them, then your filing status with the Secretary of State can go inactive, and that would be a problem. So make sure to stay on top of those as well as updates like we've talked about. And then number 3, as always, please review all of our tech tips and action tools for all the information you need, as well as our insights, the most, up-to-date information in the industry regarding this topic. We have all of that in your portal, so make sure you check that out, because all that information is there to serve you and help you make the best decisions and set your company up for success when it comes to building business credit. That is our main objective, is to walk you through this program and give you all the information you need. So happy incorporating.